What's going on, family? Welcome into another video. This is our stock sermon Sundays. It's a little bit different setup. As you see, I'm in my mobile setup, but we're still going to provide you the value here on this channel like always. So there's no live this time on our Sundays, but if you're new to my channel, we do have a stock sermon Sunday every single Sunday at 7 p.m. Eastern Standard Time. But I'm pumping this video out for you for the week because it's going to be very interesting. As I always say, every single week starts off on Sunday as how we set the tone into Monday and Tuesday, and then the trading opportunities that are available, but also the long-term investment opportunities if you're that person is looking to pick up some shares or dollar cost average, or maybe have some some profit taking opportunities as well if you've had this 18, 20, 30% run up on various companies, some 100% run up from the lows. All right, so without further ado, let's get into it today. I'm going to go over the charts, S&P 500, NASDAQ, look at the futures market of what they're doing at the current moment, and then give you that reaction of how that downgrade for the economy has affected the after hours and how they may affect Monday and Tuesday. All right, that's a mouthful. What you can do is check down below with some links, learn more about myself, Dr. B, and also join our Leverage University Discord if you want to have that financial acumen, the trading floor, entrepreneurs, thought leaders, professionals inside of one place in a hub. All right, so let's jump into it today. I'm going to jump on the charts really quick and just show you what I am talking about here. Let me shrink myself. Okay, what I'm talking about here, if you can see the futures market, okay, right here, ES main, NQ main, RTY, and YM, okay? So these are our futures here, and you can see that there are red at the time of this recording, all right? Also, in the after hours, you can see that they're red. Now, for those that are not abreast of what's going on, you may say, man, we were going back to all-time highs, and we still may, okay? I'm not here to, Brian, you were just bullish, and everyone was just bullish, and now we're panicking just because there was a little bit of a news outlet, right? It is somewhat of a lagging indicator, so we want to make sure that you're understanding of that it's ironic, right, that we were heading towards an overextension, headed back to all-time highs, multiple green days in a row, multiple weeks. Like, it is looking super good, and then now all of a sudden they pop this news out of nowhere, right? And it's not out of nowhere, okay? So we know, or those who do know, if you know, you know, that this is not a coincidence, okay? That this news was released right at the time that we had an amazing week, and oh, we're all of a sudden doing bad. I thought we were doing great, right? So it still goes with my theory of I think we have a lot of underlying indicators with our U.S. economy and the debt that we're still holding. That is why President Trump is trying to get Fed powder cut rates, is because he wants to refinance that debt and get us out of underneath the water, all right? So let's look at the SPY right here and see that we are down after hours right now. Okay, so the SPY closed at 594.20, okay, on Friday. Now, if you see here, we have given up those gains, roughly dropping about $5, $5-6, roughly about just over 1% in the after hours, okay? Excuse me. Now, on Monday, tomorrow, we're going to have an interesting time because anytime we have these gap downs or gap ups, we have two things to worry about, okay? One is, do we continue, right? Do we have continuation in that trend count? Meaning, do you see how we gapped up multiple times here on the S&P 500 when those positive news outlets were coming in, and we kept gapping up and gapping up over the weekends? Good news, gap up, okay? Good news, gap up, good news, gap up, and we don't come back to fill these gaps, or we don't have that healthy pullback as some investors and traders may want, okay? And I was telling my community last week, I said, we don't know what it is. It's going to be something. It's either going to be Trump, it's going to be a war, it's going to be, in this case, it's the credit rating downgrade, okay? Now, this hasn't happened over a century. The last one was in 2011, so I'm going to show you that, how that reacted. It was August 5th, 2011, so we did have somewhat of a red week, which coincides of our natural pullback, okay? So we almost reached that 600 level there on SPY, but we fell short just slightly, and you can see there, all right? So what I want to look for is I want to mark these previous levels here, okay? You want to still understand that we have changed trend on a higher time frame, okay? So we've changed trend on a monthly, if you can see there, that buy up on a monthly, and we have completely changed trend where that pivot was at 550, okay? That 550 pivot right there, okay? Now, the next pivot point that we had was 570 to 567. Okay, so about that $3 range right here above those previous highs was also a bullish pivot. So if we're above 570, ideally we are still having higher lows and higher highs being printed on higher time frames. Okay, so what does that mean, Dr. B? That essentially means I know a lot of my community, and maybe you are comfortable shorting the downside. So I always give an example of for two different or three different types of people. Okay, we have the traders, we have the downside traders, upside traders. People can trade both directions. We have people that only see bullish, right? They only like seeing green. They're like, I don't know how to trade the downside. I don't know anything about puts. I just know the stock market goes up. And then we have a long-term investor, okay? So I'll get my long-term investors out of the way very quickly. Should you panic with this? No, okay? This is, again, data that we have to react to. We shouldn't panic. We shouldn't panic sell, right? You have to react, and maybe you want to have some profit taking depending on your position size in some of your various stock holdings and ETF holdings. Okay, that is up to you, not financial advice. Okay, now on the trader side, if you were a bull this week, okay, I'd be very careful of where the bottom is this week. You can continuously buy up calls where your key levels are. And on SPY, your key level this week is really, in my opinion, going to be closer into the full gap fill. I would be very careful about this downgrade rating popping up, creating some type of lower high potentially. If we can't clear back above that 590 level, okay, and we start rejecting 589 again, we stay underneath 589, we can have this sort of downtrend starting to come in. So I'm speaking to my bull traders, people that only like calls. I would be very mindful of where the bottom is, okay? So this week, okay, you can have something that coincides like that, okay? So that would be slowly, if we start forming lower highs this week, we'll have to see how Monday turns out. But if we close the day on Monday with some type of lower high below 594, ideally below 589, then this week could be somewhat of a downtrending week, okay? Now, if you're looking for the best call opportunity on the overall market, you want to see SPY come back somewhere close to that 570 level, okay? Ideally, if you want to have the best, maybe you want to swing some calls into the summer, where can I pick it up again for that next run up again? Ideally, the best opportunity would be this full gap fill into 570, see if 570 holds. If it can't, we've got some lower levels on the downside. All right. So 570 would be my level that I would say would be the best opportunity. Well, Brian, what if we don't get all the way down to 570 on SPY? Okay. It's going to be closer in that 577 and potentially 580 if it reclaims. All right. So I'm going to be watching that psych level of 580, what it does at 580 if we pull back to there, which we should, in my opinion. All right. And then 577. If we clear underneath 577, you have some more downside to come in. So please be careful. If we do have some falling knife action, some red this week, some profit taking this week, and I'm talking specifically to my people only on the call side. All right. All right. So just wait for a confirmation of the bottom at these key levels, which would first, in my opinion, be 583, 580. And then, in my opinion, if you want the best risk to reward, down into this gap fill of 570. Okay. We may have a little bit of stopping in the middle of the gap. We got 575 in play. It's very wide ranges. So if you're writing this down, 580, 577, 575 as a psych level, and then 570 as, hey, this should be a confirmed bottom this week for a temporary relief back to the upside. And it should look something like this. Maybe we have a double bottom. We start reclaiming and see if we can get back to the upside. Okay. I'll get a little bit more concerned, maybe not looking at calls right now, if we get below 568. Okay, if we get below 568, there may be some more downside, and then you can more confidently switch to the put side. All right, so there's my call only bullish folks. Now I want to speak to my folks that can trade both sides, or if you'd like to learn how to trade both sides, okay? We want to look for some downside action this week to continue through the gap fill, okay? So what I'm looking for tomorrow ideally is I don't want to jump the gun and immediately enter puts right away, okay? Because same thing with calls, or same thing with bullish action. When you have stuff happening after hours, you want to give a little bit of, as we call, breathing room, just to make sure that you understand where we're headed next, okay? Because guess what? I am very open to saying this was a fluke, something comes in, and then we come right back up to the highs, if you can see right there, all right? So I want to know that we're still in a bullish market because we've reclaimed 550 and 570, okay? And we want to get back and see what that retest looks like. All right, so here's what I'm gonna be looking for the put side. Okay, this yellow line right here, if you want to mark it on your charts, that's 589. If for some reason tomorrow we get underneath this 589 and then we can't get back above 589, we stay there, okay, I'd be looking for 583 and then 580. Okay, and that would be a put opportunity for the overall market. All right, so I know I'm just talking about SPY right here, but if you've been watching my channel for a minute, please make sure to go ahead and hit that like and subscribe button. I really appreciate it. Hit that notification bell if you're liking it thus far. If you like the way I'm teaching or explaining things and you like our educational videos, go ahead and make sure to do that. But you can trade various different stocks. So if you like to trade Tesla, I'll get to some of our liquid stocks that we like to trade on a weekly basis. But if you like to trade Tesla, if you like to trade AMD, NVIDIA, Amazon, Google, Apple, things of that nature, you typically want to look for the direction of SPY and QQQ, okay, the NASDAQ. You want to look for those directions, and then you can say, I don't like trading SPY that much, but I'll switch over to Amazon, Google, Apple, so on and so forth, okay, because I want to trade with the trend of the market ideally, okay. So the market's bullish, I want to look for some bullish momentum, bullish stocks, and I'll trade those typically. Or if something's relatively weak to the market, maybe you trade against it slightly, but I want to look for those correlations with my respective stocks that I like to trade. Okay, so that's why I go over SPY levels so importantly, because once you get a direction for SPY, then you have your respective stocks up and you can trade those, which we'll get to. All right, so 589, if we stay below that 589, I'm gonna be looking for 583 and then 580 ideally on the downside. Okay, now what if we reclaim and get back above 589? Okay, then I want to be patient and wait for that retest of previous day highs, which would be somewhere around this 594. And then I want to look at that pivot right here, which would be right around 593. Okay, so that would be a lower high pivot as well. So if I somehow, can't get that, if it starts to get strong and wants to reclaim, and this is somewhat of a fluke overnight type of thing, and this is, a higher low, and we bounce here, right? We want to be a little bit more patient because it may want to test 595 and that was a whole fluke, and we may want to try to trend up to 600. So I have my mind open always at the beginning of the week, especially for a lot of these after hours moves where you have to react in the morning, or if you're trading futures, yes, you can get in a little bit earlier for that particular move. But I'm looking for a recovery ideally, but with that type of news and the panic a little bit, there might be some profit taking. I'm not saying panic selling, but if you're up and you were in calls, some stop losses might get hit if you swung calls over the weekend, or people just said, hey, I don't want to see it go any lower. I'm going to go ahead and take my profits, lock it in for the summer, and go about my business. All right. So there are the levels on SPY, but my sentiment this week is going to be leaning more so on the downside. And here's another way that I'm confirming that as well. Okay, let's look at the fear and greed index here. And the fear and greed index is almost in that extreme greed sector. Okay, so I would like it to be up in extreme greed to be completely confident. But if you can see here on this timeline, every time you see the chart looks very, very similar. So every time we got up into this 70 to 75 level, whether it's extreme greed or greed, you can start to see it gets a little bit heavy and the market pulls back. Okay, some type of news comes in. If you see there, October, it was running and running, got up to greed 72, 74, up, pullback week. into the end of the month. And then we went right back into fear. Look where we are right now again. All right. So you see what I'm saying for those more specifically that are new, because I know I have a lot of new people that click on these videos and whatnot, and you may be watching just from the algorithm that may have presented this video to you. Okay. So we're in almost extreme greed. It is that time where you may see some fearful news, some random headlines, some strife coming into the market, right? Some sentiments that might not be good, right? Some profit taking that might come in. So that is expected at these levels. So it does not surprise us that this came in at this time. All right. Let me get off of there and let's keep it moving. Let's keep it moving. So here's our key events for the week. Market reaction to the Moody's downgrade, which is tomorrow, which I just went over. U.S. crude oil inventory data Wednesday. We have manufacturing PMI data. That's going to be very key for Thursday. And then we have home sales on Thursday, home sales on Friday. A couple of Fed speakers. Okay. So in my opinion, not a very heavy packed week. So that should create some good opportunities where you don't have a lot of interruptions. So you don't have CPI, PPI necessarily that may have skewed the data, and you're trying to decide if you had a great trading week last week. Awesome. There were some amazing trades, UNH, some others, healthcare sector popped. So congratulations to those that checked out that video last week, right before it popped. All right. So that is our sentiment for this week, is expecting a little bit of profit taking, expecting a little bit of red. Okay. If you can trade the downside, if you're comfortable with that, that is the way I'm going to be slightly leaning, since we're close to that extreme greed. If you are a person that says, hey, I like to buy shares on the low, I like to trade calls only, I would be very mindful of where the dips are, where the bottom is, and you can trade those bounces back to the upside. All right. Let's jump into a couple others, and I'm going to get you out of here. Let's jump into QQQ really quick. All right. QQQ, if you can see there. In my opinion, some of the tech sector was already getting a little bit heavy. Apple couldn't really get above that 215. Amazon was getting stuck a little bit, trying to go to that 220 level. And we got a couple other names. NVIDIA obviously running. NVIDIA does have an event on the 20th. So on Tuesday, be very mindful that anytime there's a major event, sometimes people sell into that event. Okay, so Jensen will be speaking, the NVIDIA CEO, on the 20th. I'm not sure what time. You can check it out. But NVIDIA will have an event reveal of something. I don't know, GPUs or whatnot. I haven't read too much into it, but just know they're having an event on the 20th, which is Tuesday. And they have their earnings at the end of the month in a couple of weeks. Okay, so we want to be very mindful of where NVIDIA is. I know a lot of you are trying to get NVIDIA to 140, but if the market is pulling back, NVIDIA might fill some of those gaps to the downside underneath 130. So let me jump right into NVIDIA. For those that are extremely bullish, if you got some call options, you're like, this is going to 150, 140, okay? And you're still holding. If you got time on your contracts for a couple of months out, you should still be good, and you can pick up some more depending on your entry, okay? But look at this daily right here on NVIDIA. Okay, so if the market pulls back, if that SPY gets back underneath, okay, 577, we have that gap, and it's going to start trending to 575 and 570. Okay, we talked about that. So I'm going to go back to QQQ in a second, but I just want to show you for my NVIDIA folks and people that trade stocks more specifically on the option side. All right, NVIDIA, if it gets underneath 130, okay, there's a little bit of a gap on NVIDIA underneath 130. I'm going to turn off the after hours here, and you can see there just slightly underneath that 130, and we have some open-ended room, some liquidity here, just a straight up move right there off of that 125. So watch 130, watch 131. That is a major support on NVIDIA, and buyers might want to step in there potentially right here, and it holds 130, and we start trending back to the upside, and it creates some type of inverse head and shoulders, and it may want to just trend back up to 140. Okay, NVIDIA is very strong, okay, and it's got to hold those levels to make sure it continues to get strong up into that 140 and back into all-time highs. But we got to see where the market's going this week after that downgrade. So there's NVIDIA for you. So I'd watch 130, 131 to be more specific. If it gets underneath 130, be careful. There's not much liquidity here on this candle, so that just simply means it could just fall straight up, it could come straight down back into that 125 level. Okay, so that would be my deep support. If SPY gets weak, tries to come down to 570, want to watch 125 to 126 on the video ultimately if it starts to get a little bit weak. All right, but there's Nvidia. Let's go back to QQQ really quick. Let me go to after hours here. And there we go. So QQQ, there's going to be a major gap here at open. So when we open the market in the morning, there's going to be this gray area. There's a gap that's going to be here from roughly about 515 back up to about 520. Okay. So on Monday, you've got two options in the market in general. You could do this on SPY as well. If we hold these levels on the low, 515 more specifically on QQQ, if we get back above it, you could scalp it back up slightly, okay, before we confirm where the top is again. If you can see there, it is oversold here, okay, on our day trading levels, our intervals, 5 minute, 15 minute, and for some that like to scalp, we look at the 2 minute there. So we could have some quick upside here back into underneath like 519, 520, okay. Here's how it would look. Holds. And we could see that push back up into that level. So if you are a person that says, hey, I don't want to wait for it to come all the way back up here because we're in a bullish trend right now. I don't want to wait for it to come all the way back up here and then me play puts. Why don't I just ride calls back up? Okay, so you can consider that QQQ, SPY, if we hold these lower ends of the levels. Okay, see there, reclaimed 515, push back up into the highs. If we reclaim 515, we'll watch the previous day low as the first target, which is 517.17 or just 517. Okay, so if we get back above 517, look for that push back up into about 520, 521 again, okay, before the next kind of fall or whatever it does. Now, for whatever reason, if we start rejecting underneath 515, okay, you see this 515 is holding. If we get underneath it in the morning, and for whatever reason, it just doesn't want to fill that gap back to the upside. Maybe it comes up, fails back below, and we hold below, right? That could trend down back into 510 and 512, all right? So watch these pullbacks. The deeper it goes tomorrow, if it falls off open immediately, I think be very careful about catching that falling knife on the downside, meaning if it falls immediately, I'm not really interested too much in puts, maybe a little scalp, because it's so overextended and we're in a bullish trend, it could rip right back up like that. Okay, so I know it's volatile. My bias is leaning. So Brian, what do you want if you're trying to catch something to the downside? I ideally want to see in the morning that we may trend back kind of up here, back in those levels, right? If we're back at 518, 519, 520, potentially in the morning, okay, before the New York session opens, I like that a little bit better for the downside personally. But if we're staying underneath here, I'm going to just be a little bit cautious, a little bit patient, maybe scalping underneath 515 for the specific stocks I want to trade. But I really wanted to trend back up and then catch the fall again, okay? So that is for more day trading this week, okay? Couple more. Let's go to Amazon, all right? Amazon, if you can see here, has a couple of gaps there. Okay, so Amazon after hours sitting just above 200. You can see this big gap here. So 200 is going to be our level. Okay, 200. I know it's in the middle of this gap, but 200 could be that hold, and we could trend back up. Okay, and we could do something like that. All right. So there's still some gaps to the upside. The market might want to bounce first and go back up before it decides where the actual top is. It may just be a little bit overreaction on Friday, and they buy the dip and it goes back up. All right. So Amazon watching 200, watching 201. If it gets below 200 and we're underneath that deeply in the morning and we can't get back above it, then yes, you can go down into the 194, 195 range if you want to scalp the downside. All right. Again, for anyone that only has call bias, if we're falling, like a falling knife, just wait for those full gaps to fill ideally, okay? And then find a bottom. Maybe it's at the end of the day, maybe it's the middle of the day. Be patient, and then you can find your dip and buy it back up, all right? Apple, if you can see here, that big gap up right there, okay? That's that 207 area, okay? 206, 207 roughly. So I want to watch the top of that gap. If we get underneath 206 on Apple, okay, ideally Apple's trying to get back to that 201, 202 level, roughly the same numbers as Amazon. Okay, you can see here this support on Apple right around that 201, 202 area. So I'd watch that as the low end. I wouldn't get too aggressive on the downside if we're coming into that psych level of 200, 201. Okay, if we get underneath it, then yes, there is a little bit more downside potential, but underneath that 206 is where you're going to have that low liquidity area right in here. You could take it down from here to here, and if you can catch it, awesome. If you can't, I'd be a little bit more patient, watch for support, see how it reacts off of there. All right, if we reclaim and get back above 210, then we can trend back up into the highs yet again. All right, so I want to watch 210. I want to watch underneath 206 on Apple. All right, Palantir. I know people have a lot of interest on that, per usual. I think Palantir personally is ready to cool itself off. All right, it's getting a little bit heavy, if you can see here. I'm not talking about for the long term. I'm talking about in the short term. Palantir rejected that 130, came up into 133, fell back underneath 130. You can see here that Palantir is just in this channel chop right here. Okay, and if you draw that trend line right there, you can clearly see that Palantir is trying to hold up that previous high right there that it broke above with this strong bullish breakout candle. So I would watch Palantir at 125. If you want to make it 124, okay, we could have some downside potential back into 120 and then ultimately back into that 115, 116. Now, but depending on how Palantir closes or how the market closes, yeah, there is, a potential for more downside back into those lower ends of the ranges, something like this. If I broaden that, okay, that is a technical break of trend, and we could come back down into that lower ends of the 100 area, okay? So mark those previous supports over to the left-hand side. I'll point it out for you there, 115, 116 as your supports. Right around this 110 level, okay, 110. And then ultimately, if it breaks underneath 110, I think we've got nothing but room back into 97 and 100, okay? So it would look something like this of a candle. It's pretty drastic, in my opinion, for right now of how bullish we've been, but it's not out of the question before, okay? So this week is gonna be very pivotal of how we finish off the month of May, how we head into June. This could be a great opportunity. If you don't want to trade the downside, just let it fall, and then you could potentially have a nice bullish summer if we find a bottom and it's still a higher low on the trend count. All right. Let's see. Tesla, my Tesla folks, what we got? Personally, I think Tesla's been, it reached its peak at 350 for the short term. Okay. Had this nice inverse head and shoulders break out of that neckline roughly around 295. And it hasn't really retested. So I personally think Tesla has the opportunity to fill some of these gaps down below, down to 300, back down to 315, and see where it goes from there. But I'll be ideally watching Tesla closer to 300 if the market is weak. If we continuously hold 325, maybe we pull back in the after hours, hold 325, yeah, we could have a reclaim of 350. It gets above 350. There's nothing but room back in my opinion, about 400. All right. But with the market a little bit overextended right now, it's not out of the question, but we're almost in extreme greed. It could be irrational, but I think it needs a pullback before going higher. So I'm more so leaning this 350 being the short-term resistance for right now, and then 300 being that support right around this neckline area. And then you got that 324, 325. Okay. Meta, just bullish. I'm not really interested in trading Meta personally, but Meta gap fill down below needs to cool off, so full gap fill down to 590, just say 590. Cycle level close enough. I think it'll just fall down to that 590 personally. If it breaks and holds underneath this 535, that is a resistance. If it holds underneath there, you can see the reaction right here, right there, and right here, and right there. So that 535, keep an eye out for that. If you can't get back above 535, we may have some downward pressure. And if Meta has downward pressure, we know QQQ, SPY is going to have downward pressure. All right. Let me scan here because I could keep going personally. So I'm going to look at our healthcare sector and give you an idea about UNH, Merck. I think these personally need to be at the top of your watch, because as we have any pullback in the overall market, remember healthcare, if you watched my last video, is a defense sector. So when the market is a little bit unstable, okay, people resort to gold, people resort to commodities, people resort to healthcare sometimes. So that is why you're seeing healthcare fairly holding up, comparable to a lot of the tech sector that's pulling back pretty heavily on that downgrade. So that is the rotation of money. If people start taking profits in a lot of the big tech, they may rotate that money over into healthcare. So UNH, you can see here, it's its first higher low close with a nice bullish doji candle there on a daily, followed by a nice bullish breakout candle there, and we've got some gap fills back up to the upside. So this week I'd watch on the downside for support. Roughly, if this is a head and shoulders, I would lean more close to 270. Okay, if it can get a pullback into that 270 to 275 area, I'd watch that as a support, a trend line support. If it holds above 285, you see this break neckline right there, holds above 285, then ideally you're looking for a breakout of 295 and then 300 plus. Okay, these are long call share opportunities. I would put leaps on them. I would put at least 2 to 3 months. I was telling my community August 15th date in the shortest of terms. If you've done June 20th, that's awesome as well. That'll be a very quick, 1 month move. But if you want to hold it throughout the summer, I think UNH has a great opportunity. It is a big player, so be mindful of that. But another player that could be in the game is Merck. Okay, so Merck has a double bottom right here. Okay, do you see that failure to go lower? Okay, came down, failure to go lower and create a new low, and it's bounced and is reclaiming that 76 level. If you don't know about this healthcare and you're on this channel, or excuse me, on this live right now, on this Stock Sermon Sunday, go check out my healthcare video in the last, I think it was the last post I made. Go check out that full video about the healthcare sector. All right, all of the charts look roughly the same. Okay, AbbVie, nice double bottom. Eli Lilly, nice higher low there. If it can break above 760, Eli Lilly has nothing but 800 in sight, in my opinion. Okay. To mRNA, nice move on mRNA. Okay, had a little bit of a pullback on Friday, so I'd watch mRNA at $24 as well. If it holds 24, it's got to get a little bit more momentum in it, but ideally, again, that healthcare video outlines it. I'm looking for mRNA to start consolidating down here, break above and hold above 25, and squeeze back up into roughly 28. Here's my rationale. It's been channeling roughly in here for a while, as long as it holds that 24 level, and it can have a nice breakout above 26, headed to 28, 30 plus. Okay. Alrighty. Finance sector pulling back heavy. So Hood has been my main watch this week, or last week, excuse me, and also this week, for a little bit of overweightness. Okay, a little bit of resistance here at 65, 66. Okay, underneath $60 on Hood, if you can see there, has some pullback levels to below. I think personally this week we may see 50 back on Hood. So if you want to trade the downside on it, if it stays below 60, ideally below this lower high, look for 50 in sight on Robinhood. Okay, you can trade that down with puts to the downside. If you're only a call side, watch 50 and see if that holds. I think that would be a nice pullback level, roughly right there, like that. Okay, HIMS, it's been on everyone's watch. I think HIMS is getting a little bit heavy. This looks like a nice double top here underneath $65. I think HIMS roughly about the same price as put HIMS and Robinhood next to each other. Those are the same, they're the same price or levels. HIMS underneath $60. I would look for closer into 52 to 51. All right. As you can see, HIMS is very strong here, and this could be a higher low. So I'd be very careful with that one because it is still on the uptrend versus Robinhood has kind of started to form more of a lower high. Hood is just rough. Excuse me. HIMS is more of a double top. So I'd just be a little bit mindful of that as it could still bounce, take out that high. And this is just another bull flag to continue higher. All right. So I'm going to be watching HIMS, Hood, in the healthcare sector. Ideally, I'll be keeping an eye on finance this week because with that credit rating downgrade, some of the banks could be, getting hit. You see there, JP Morgan, Goldman Sachs pulling back just a little bit. And I want to see if these things continue or is this just a bounce? So keep finance on watch, Hood in that sector as well. Keep HIMS on watch, healthcare in general, and we'll keep our tech sector on watch as well as far as the upside holding levels. But I do think this is going to be roughly a red week. All right. That was a mouthful. Thank y'all so much. I want to get a video out to you. I'm on my mobile setup again, so I appreciate the support. If you can see the effort in the continuation of the consistency, give me a like, subscribe, comment down below. I do check those. I appreciate them and the support. Check out Leverage University. There should be a small discount code for you if you're still not inside. I'd highly recommend it if you're not understanding some of this stuff. We are having a lot of successful individuals learning, growing, okay, and going through the process of this because this is not easy, okay? Full analysis that I'm doing. No, I do not read off a script. No, I do not plan these videos all the time. I have an idea. I'm talking from the dome. This is full education, and this is my analysis of what I do to lead into decisions for the week, whether I trade heavier, whether I trade lighter, whether I don't trade at all and just buy shares and hold, all those good things. All right. So thank y'all so much. Peace, love, and blessings to you. You have an amazing, amazing week. I'm traveling at the time. Those inside Leverage University, I'll be having watch list and the signals channel, but I'll be a little bit more vague on the live trading this week because I'll be on the road. But thank you as always. I'll talk to y'all in the next one. Y'all have an amazing week. Be safe.